Evan Cooperman, welcome to Leverage. I have been trying to get Evan on the show for a while, and not because he's not the most gracious, lovely human in the entire world, but because he's the CEO of Foremost Financial, and they are a boutique mortgage lender. And originally, I thought Evan, other than just being a lovely human and being so intelligent and having so much insight, to come onto the show and talk about, the processes and pricing and costs of building and, the trends in the market. Lo and behold, he happened to be available right around the time that the tariffs were announced, started, finished. We'll see what happens. But anyway, so we did a little pivot, and I'm really excited to talk about it on the episode today.
Well, thanks for having me.
Yeah.
I appreciate that you think I have good perspective to add on those subjects.
Oh my gosh. I think that all of this and from every level of government, I had that wonderful talk with Brad Bradford about like the city level and building affordable housing. But you have such great insight into it. But maybe just give everybody a little understanding of like what Foremost Financial does. What does that mean to be a boutique lender, and what do you guys do?
Okay, thanks. So basically we're private lenders. We fund stuff that the banks don't. Our niche is residential construction financing, so we focus mainly on infill, building stuff, tearing down old stuff and building new stuff.
Okay.
We also will do industrial and commercial. Mm-hmm. Interestingly, which I'm sure we'll get to, the residential is dead right now. Like there's not a lot happening in that space at the moment, but I'm sure we'll get there. So we have private capital from high net worth investors. Okay. We have a mortgage fund. We also own, on behalf of investors, some apartment buildings and an industrial asset in Edmonton.
Wow. And you are across Canada?
No, we lend only in the GTA.
Oh, okay.
And we own apartment buildings in the core of the city. We were looking for the next best risk-adjusted returns, and we identified Alberta, and then we identified industrial. So that's why we have one asset. We're having a taste to see what it's like investing there, and it's been good so far. Interesting.
And when you say like infill, like when you're saying take down and build up, are you talking, and again, like just breaking it down for everybody, because we're talking in terms that we understand every day and in general. So when you say like taking down whatever's existing and building up a condo building, is it more of like a small niche, like not a Daniels, for example, but a smaller builder doing?
We'll go even smaller. So
okay,
my partner who's turning 80,
wow.
Founded the business in the late 80s. And you go back to our roots, it was buying bungalows at Avenue and Lawrence and tearing them down and building houses, right?
Oh,
so
okay.
Infill is, you buy something old, it could be a single family house.
Okay.
And then you just build a new house and then try and sell it.
Okay.
Or then, that's usually where builders start. Then they want to do 2 houses and then 3, and then eventually they might buy 2 or 3 lots together and build townhouses. Or it's somebody who buys a site where they're taking it through the rezoning process and they're trying to add significantly more density. So okay. It's anything where you're creating more housing supply, usually from existing land. Okay. Or existing stock.
Yeah, no, and I think there's just so much verbiage about building and multi-residential and single family and whatever. So I think it's really important for everybody to understand all the different layers and what is out there for people, and again, what you guys do. So in prep for this episode, I listened to your annual
AGM, the annual general meeting.
And so you had your State of the Nation. I don't think I've ever taken more notes. And it was great because I think it really spoke to how I feel about what's going on in the market, which is, kind of cut out the noise, look at the data. No one knows what's going to happen. We're probably going to get it wrong, which I loved. You kind of started that out and you were like, I'm going to start this out by saying, I'm probably going to get this wrong, but here's why, I think what's going on. So one of the questions I had for you was like, what was that big takeaway that you had for people, like when they were listening to you? And this was June of 2024.
So if you don't mind, I actually want to go back a few more years prior to AGM. So every year at our AGM, we present to our investors and we kind of do the State of the Union. And we follow very simple metrics at Foremost. We try and keep things simple. One of the things we follow in housing is we call it mean reversions. The idea that over time, prices will go back towards the average, right? Because the average is, basically it's just all of the price history combined gives you your average. So if you go back and look at single family housing in Toronto, since the 60s, it's 7% a year. House prices have gone up, okay? So we just draw that, in a chart. And then we look at the actual house prices and we see where they are relative to the average. And we put that up at the AGM, we show the investors where we are. And we say, we don't know what this means in terms of what's gonna happen.
Right.
It's just a temperature gauge. And sometimes it's getting a little bit hotter, which means maybe you need to seek some shade. And so it's really just what direction are things going. And so what we noticed in 2021, prices started to go up above the average.
You don't say.
And then, as you know, in 2022, they peaked at around 46% above the average.
Yeah,
so
I think the peak month that year was March. I think that was the March. And not to interrupt you, but to interject, I think it's always important because the trolls love to come after the real estate agents. I would sell my soul to go back to the 7%. Those days where you bought a house because you wanted 4 walls for your family and you weren't looking at your house as an investment per se. You were just saying, listen, I'm going to buy properly. I want to have a good school district. I want to have enough room for my family. And I want it to be something I can afford, right? And then there was this kind of, formula that everybody knew. You held onto your house for 5 to 7 years, and that was where you knew you were going to make a little bit of money and you would have investment in it to go and buy up. Right. Most agents, and I will say, me included, during COVID, sure it was fun. It was a roller coaster at the beginning, but a lot of us were looking around going, this is not good. Right. Nothing good was going to come of this. Aside from people being priced out of the market, we all looked around and went, the end of this is going to be very bad.
Yeah, it's actually been surprisingly less bad than it could have been.
Oh my gosh.
And so I guess now you can fast forward the clock. So basically March of 22, house prices peaked. We thankfully had taken our foot off the gas starting in 2021. So at those AGMs, we were standing up and saying, okay, the temperature's getting a bit hot. We need to just dial back our risk appetite because it's looking frothy, right? And it's just, if you believe that significantly above average is not normal, and if prices go back to average over time, how are they going to go back to average over time? They probably need to go down. Right. And then the Bank of Canada started raising interest rates because inflation was becoming an issue. And it was some of the most aggressive rate tightening that we've seen.
What was it you said, 4 decades?
Yeah, I mean it was extraordinarily aggressive. Okay, so there's going to be an accident that happens when that happens. And thank goodness it really hasn't happened in housing. What's happened is house prices have come down. And the message we were giving at the AGM was, guys, good news, prices have started to come back down. We're approaching back towards what we call the mean line, that average line, which means there's less downside to housing prices. That's a really
good point to take away.
If you had an appraisal at March of 2022, we were going to lend against a house with that appraised value. There was a lot more downside then than there would be when you're back at the average. Yeah. And so now we're like, okay, we're starting to get a bit more optimistic about the world. Yeah. And that's really where we are today. So today, if you look at it, you are now a little bit below average actually. So remember, the average line is going up at 7% a year. So even if house prices just stabilize, eventually the average will go above it, right? And so it's been a combination of the average line still going up at 7% a year on the graph, and prices kind of coming down and now bouncing around, not going up, not going down so much. And so we're in a pretty, I would say, healthy position. And hopefully at some point we'll get to just supply and demand and some of the factors that influence both of those things. Right. But just to answer that part of the question, we're now below average in terms of house prices historically.
So we're below the mean, which I think again, what goes up has to come down. But I think it's it's a great takeaway for anybody who's listening to this, who's thinking about being in the market or making that move, is that, this is now our correction. And where we want to sit is in that mean. And I think that was the change, what I was talking about before, about everybody there's been this shift about people buying residential and saying, I'm going to make money on this, or, having said, what kind of deal did I get? How much money did I make on it? Or I'm overpaying. And so we're moving towards this correction of going back to just buying a house, right?
Healthier, like a healthier market.
Healthier. I mean, I always say, I would love to go back to those days where you can, a house sat on the market for a couple months. That's okay. Go back and see it. Bring your parents, bring a contractor, have that negotiation, right? Go back to that. Anyway, So thank you. That's a really great takeaway. And I think that that's probably why a lot of the economists are calling for an increase in volume in the residential market in 2025, but a lateral price change or non-change, right?
Well, affordability is a factor, right?
Right. Money's still expensive.
Money's expensive. Now, interest rates have been trending down, and so that might help just, I guess, volume, some of the turnover. But to your point, look, actually, I guess, to the extent that you're below the mean line, it's possible prices could go up, right? If in theory you're supposed to be at the mean line, but I don't feel it in this market now.
I don't either. I think buyers feel they're exhausted, and I think they feel not taken advantage. I think they're less trusting. They're not sure about what's going on. They had, the Bank of Canada, our Prime Minister, come out and say, go ahead, spend, interest rates are going to stay really, really low. And so now they're like, oh, it's trending down. They're like, are they? So, but it'll depend on supply for sure. So I want to shift specifically because more of your expertise is, so nothing's being built right now. So I was on, aside from listening to your amazing call, I also was on a call with Benjamin Tull, who, he's like he's the market whisperer. Like he's straight shooter. He always gets it right somehow in his predictions, even predicting that the Bank of Canada or the government's going to do it wrong. And, we talked about the condo market and talking about multi-residential and talking about how nothing's being built right now. And so he talks to builders every day. You talk to builders every day. And, you made a point to me, writing back to me, like, it just doesn't pencil. It doesn't work, right? It doesn't work on paper. And so I'd love to hear why. Talk to us about why this is not working right now.
Okay, so let's separate out condo from single family housing.
Right. Yes, please.
Let's start with single family housing. So I haven't verified the stat, I just read it.
Okay.
But it was something like fees and levies and taxes and just the cost of building a house, like development charges and parkland dedication, all the stuff that you have to do.
Right.
Is somewhere around 35% of the selling value of a home.
I want to stop right there. I think that that's so important because I think that most people who are feeling that crunch of affordability and can't buy something and feel like they're just being gouged and that everything is overpriced just to make more profit. And at the end of the day, those levies are coming from every single level of government, correct?
Every single level of government.
So, they're in business. They're not doing this as a hobby. And that's like before you put a shovel in the ground, 35%.
Right.
Cost.
And that doesn't account for the risk in dealing with that municipality and all of the delays or surprises you might get in trying to rezone.
And yeah.
And that takes much longer than it used to, and there's a lot of risk in that process as well, which creates a lot of uncertainty, and capital doesn't like uncertainty. So The other thing that was interesting to me is that what they said was for affordable product, like if those...
It's a great word. What do they mean by affordable
so
product?
The levies are fixed, okay? Right? Whether you build $1 million home or a $2 million home, the levies are fixed.
Yeah.
So the problem is builders have no incentive to build $1 million home because the percent of the sales value goes up, right? It's like, I think they said 45%.
Right.
So builders aren't building whatever, I don't even know how you want to define affordable product, but they're just not building it because it doesn't pencil. Okay. So
under $1 million, I don't know.
They can't, right? Because if you're spending $400,000 in levies, it's just not happening. It doesn't work. So then they don't. They want to sell houses for $1.8 million or more. So that's a big constrainer on supply.
Right.
And so I think what's happened in the single family, like you mentioned it, and I also, I have friends who work in subdivision development, and they haven't sold homes in a year or more, and they're not building, right? So if they have the wherewithal to just sit, they're just going to sit and wait, either until, I guess, until the market comes back, or until they get desperate enough that they're willing to lower their prices and basically wipe out their profit margin, okay? So you've got these weird factors at play right now that are constrainers on supply. Okay, one, the risk of how long it takes to get entitlements and the risk that comes with that. The fact that money's more expensive, which means that while you're carrying the land through that entitlement process, it costs more, which wipes out profit. All of the levies, just the market in general, and sentiment. So then condo space is interesting because the life cycle is longer. like to bring a condo on stream is, I don't know, 3 to 7 year process, right? Depending on how lucky you get with your planning.
Yeah.
And that's just stopped. It's dead. Stop dead.
Well, and you're also selling on future purchase price, like on value. You're selling on future value. And we just saw, I mean, I don't remember the last stat about how many doors were coming to vacancy for possession in 2025, but it's enormous.
I think it's what I read, again, don't know the exact number, but 2024 was a record-setting year in deliveries, and 2025 is going to exceed that.
So the nice part is, and I want to like find some positive is that in 2024, and Benjamin Tal spoke about it also, he said the delinquency is not a macro level. It's an individual level. There are people that are having, I've lawyers I work with, I was speaking to a mortgage broker at CIBC yesterday, and he said, listen, like they're coming up, they're not worth the appraise, like they're not being appraised. They've got to come up with $50,000, $100,000. But are we seeing mass delinquencies? No, but some people are walking away. So there is some, like we still live in Canada. There's still the stress tests. There's still certain things that allow us not to have that. But, you know, the condo market, from what I understand, is just being like at a halt. Like it's just like basically they've housed indefinitely, other than the ones that have cranes in the air right now, nothing's happening.
Look, I mean, there's just, again, first of all, everybody can see demand has gone down and you've got a pipeline of stuff that's coming. So, you know the expression, you can't be half pregnant, right? Like if you start a construction of a condo, you have to finish it, right? And if you don't finish it, the lender's going to take it over and they're going to finish it.
Well, and people, if you don't know, you have to sell, what is it, 80% of your units or 70% of your pre-sale?
Call it 70 to 80, depending.
70-80% of your units before you even break ground.
Right. So what you have now, everything that had started construction is going to finish and be delivered.
Ooh,
okay?
Yeah.
And so you've got this huge amount of supply coming, and on top of that, you've got what they call purpose-built rentals. So people are building, you know, like in the olden days where they built apartment buildings, they're building rental buildings.
Yes.
They're not condos, they're just rental buildings.
What do you think of that, by the way? There's a big surge. Like I'm really seeing, like, and in the luxury space even.
Yeah. So look, for society, it's great. You need more rental product. Okay. CMHC has got a very favorable financing program, which has distorted the amount of supply available in that space. Yeah. So in the short term, you probably have, if you go back to supply and demand, you've kind of had demand destruction because of high interest rates and just affordability issues and, you know, super high rents and everything. So stuff is less affordable, so less demand. And on the other side of it, so now you have on the supply side, you've got all of this inventory that's coming, okay, that's meeting a market with less demand. So probably that means there's downward pressure to rents and
the rental market
and to end value. So the question is, you don't know of the pre-sales how many will close, and how are the developers going to sell all their unsold inventory, which is usually the profit margin.
Right.
Okay. And is that going to take, you know, we call it absorption. Like how long will it take for the market to absorb all of that inventory? And is it a
2
year?
years.
So you say 2.
Yeah, I say 2. Well, I mean, and again, there are people who are a lot smarter than I am.
Okay, wait, let's riff off that. You're in the game. I love that because I've been trying to figure that out. So that's a helpful data point for me because, you know, you've got all of the supply, okay, say it gets absorbed in 2 years. Nobody's creating any new supply, and to create that new supply takes 5 to 7 years. So what's going to happen?
Oh, it's going to go through the roof. I really do, and again, like, totally giving him credit. Benjamin Tal is calling it that, like, and I've had clients who are like, you know, looking at their condo going, wow, we bought during whatever. And I said, just hold on to your hats. Like, because nothing is being built. So we have, you know, months of inventory on market, right? And that's how you understand if it's a buyer or seller's market. And so we're very much in a recessionary, you know, buyer's market when it comes to the condos. And all that's going to happen is there's going to be more on the market that's going to come available. So, you know, it's going to take, I would say regardless, even though condos are less seasonal than single family homes, you're still going to see the most of it like happen in spring. By the way, I have just sold 2 condos over the last month. Like, and in fact, we'll get to the tariffs. Like I did it during like the explosion of the tariffs happening. So people are still buying. People are still buying good products. I think we're going to get saddled with what the investors bought, which were the 500 square foot houses, square foot condos that have no locker, that have no parking, that again, going back to the cost of what builders can afford to build, they're making the most money on those and not anything else. But that's, I mean, if you break down the condo inventory, that's what 60% of what's on the market is 0 bedrooms or 1 bedrooms,
right,
under 600
and
square feet.
People don't want that.
They don't want, now, will they want it because we still got high immigration and because people want to start getting in, and because I have to tell you, if I had a child that was, you know, looking to leave the house and buy their first, this is probably the best time to get into the market from a condo perspective, that there are people that need to sell. But I would say it will need 2 cycles.
Yeah, so look, we don't know, but our working hypothesis is that whether it's a 2 or a 3-year absorption cycle, there's going to be, you know, it's probably not, you know, it's more of a buyer's market than a seller's market during that time. But after that, there's going to be a gross supply shortage. And just because you mentioned immigration, I want to touch on it.
Because we're going to talk about politics in a second.
Okay, so we'll talk about, so I can save that for the politics part.
Yeah,
but
no.
You need 2.1 live births per female in a country to maintain the population. In Canada right now, we're at 1.5. Okay, so absent immigration, the population is going to shrink, which I don't think any government, whether it doesn't matter what political stripes you are, I don't think any government wants that. So I don't know if you want to go to politics now, but my philosophy on politics, a lot of politics is theater. Okay.
Well, everything we're seeing right now is theater. I mean, I feel like I'm living like in a reality show about what's going on everywhere, right? And I think we've all we're like, is that really what they want to say? Or is, you know, I think we've seen some really shocking things like here in Canada, but also in the US that have made everybody kind of, you know, question.
For sure. And so I'm sure we'll peel the onion on that.
Yes, but, we will. If anyone knows me, they will. We will, yes.
On immigration, you know, I can't see, there could be a shorter period of time where the government's like, you know, immigration's really bad. And I think immigration needs to be strategic. And the way the current government has done it has not been the right way. But you're going to need immigration. So from a real estate perspective, if you believe that immigration will still happen at some level, and Toronto, Canada still is one of the best places in the world to live. Like if you're in an emerging market and, you know, you said, hey, the doors are open, do you want to come? Everybody would come, right? Or lots of people would come. So there's still demand.
Right after we get a new mayor. I said it. There you go. Yeah, go ahead.
You said it. Well, we do like Brad.
Yes, we do. Vote for Brad.
So if you believe that there's not enough supply long term, okay, the demand side will still be strong, because even with interest rates, you're going to find an equilibrium at some point, okay? Whatever it is. I mean, I bought my first house, I had a 5-year mortgage of 5.4%, and that was considered cheap.
Do you remember that?
Yeah.
That's impressive.
Yeah, because I remember the time, like with the trauma of having a 5.4%. I mean, all my buddies who were variable were laughing at me because, you know, rates just kept on going down. Right. And I've always borrowed fixed my entire life, right? But now my latest mortgage is a 1.
Really?
Yeah. Oh. So my one right now, which comes up next year, it's a problem, is 1.64%.
Everyone who just heard you say that hates you.
I know. It's like
I actually might hate you
bottom.
a little bit.
But what's it going to be when it renews? 4 or 5? I don't know, right? But
imagine you were in the US and you had a 30-year term with that. Yeah. Well, that's a whole other inflationary conversation. But yeah.
Anyway, so probably, you know, immigration growth still strong. People still want to move here. You know, supply is not great for a variety of reasons, which you talked about. Municipal policy, as much as they talk about, you know, wanting to create more supply, and it's like a political issue, I see it on the ground, how difficult it is for our borrowers to get a project done. It's horrendous. Because
let's peel that layer on the onion. Like what?
Shadow studies, traffic studies, whatever, you know, there's so much bureaucracy and so much red tape around getting things done, and uncertainty, because you're dealing with like a whole bunch of small city councils who invariably are NIMBY, you know, not in my backyard. Yeah. And so nobody wants to say yes to the stuff. Yeah. And they say no, and then you got to appeal it, and it's expensive. And so it introduces a tremendous amount of uncertainty in the process. So what took a year to get, you know, if you had to do your zoning and your entitlements and be able to put a shovel in the ground, now takes 2 or 3. Right. And so there's so much uncertainty. It's hard. I feel for anybody who says, you know, developers are greedy and whatever, like they deserve to make any money that they make because of all the risk that they're taking.
Yeah, that's a good point.
To make it, especially now.
No, I completely agree. And I think that the government at all levels has done a disservice by promoting that they are going to bring, and this is everybody, like every single level of government, about affordable housing and how they're for affordable housing. And listen, I look at it on a city level. We have a very like left-wing mayor who believes in affordability and so socialism, almost bordering on communism, and I haven't seen the second land transfer tax be taken off the table. I mean, like, I think that, you know, it's not, there's not enough transparency on what really goes into it. And so everybody just votes on like, well, they're going to bring us like affordable housing. And like, as Brad said, like, you know, we're going to do laneway houses. We're now allowing laneway houses. We're now allowing garden suites, but you know, X, Y, and Z and why you can't do it. And they're just, I mean, I remember talking to someone about the major streets, I don't want to say call it an act or bylaw or whatever it was. And I was like, why aren't more, I thought to myself, first of all, if I lived in a house that backed onto a major street, I'd be selling tomorrow. I'd be calling my realtor and getting out of there. And he said, don't bother, like it's not happening. Like like you're saying, who can afford? So you've got a house on Lawrence West and you're going to take it down and you're going to put what, 11 units on it? What are you making on it?
I mean, you have to have a lot of vision and you have to have a lot of patience. Like I think there will be a lot of opportunity and money to be made in land development, but it's going to be people who've got enough balance sheet to ride out many years, right? Because somebody might assemble all those houses on Lawrence, but it'll take a decade or 15 years, you know?
Yeah. I mean, and listen, at the end of the day, like I had the honor of going on breakfast television and talking about laneway houses. Like I'm obsessed with them. I think they're great. I think, you know, they're very much accepted in Vancouver. And I think that I wish I had a laneway house. I said to Eddie, my husband, I was like, if we had a laneway house, I said I'd build one. I go and then we would retire and I would just live in my laneway house and I'd rent out the house. Like there's so many great things from an investment standpoint you can do. But like I have a friend who builds them and he's like, it's a nightmare. It's an absolute nightmare. So let's get into politics. Okay. So how do you think, so first of all, I think that the tariffs are over before they even started. I think that, and I'd love to hear your perspective, but I think everyone has to realize that we are in an election year, although I really think they're going to figure something out and push it to next year, but I can't even talk about that because it's going to make me want to jump off a bridge. But I think that everyone has to remember that in an election year, you never have a bad economic year. Nothing bad happens in your, election year. And we in Ontario are about to go into 2 elections. So Doug Ford, has he called the election yet?
I think so.
Did he call it? I don't remember. He's called it. Okay, Max has said he's called it. So we only have good things happening. So there's no way that our not Prime Minister Trudeau is going to allow this to happen. And I hear now he's having a summit with Trump and he's doing whatever he needs to do. Do you think the tariffs are going to happen? Do you think that it's going to, like, what are you, and you just said you just did your quarterly report. What are you thinking? Okay,
so we joked about this before and how my AGM, I always say, like, we have no idea what's going to happen. So the truth is, I have no idea. I couldn't bet on it. Like, the fact is tariffs are not logical. Okay, they're inflationary. They hurt both.
Everybody.
They hurt everybody. Okay, so economically, it doesn't make sense. However, we're human beings, and humans don't do things that make sense. Like Trump it's the art of the deal, right? It's probably a masterful negotiating strategy, which is gonna,
theater.
It's theater, okay, but he's really good at it.
He's so good at it. And by the way, I just want to point this out that I think that the reason this is all happening is because he doesn't like Trudeau. Of course. I think he's giving Trudeau such gears, and I think if we had a conservative government, we would have a totally different conversation with him right now.
I agree. I think that still, even if there was a conservative government, like basically what Trump is saying is we got to make a new deal, okay? Let's get to the table. Now we just have a dysfunctional, non-functional government so that nobody's at the table to make the deal, right?
No one's working.
Nobody's working. But in theory, if you had a working government, somebody's flying down to Washington and they're renegotiating and the deal may not be as good as it was before. There's going to be puts and takes, but you're going to negotiate some sort of deal. So my feeling on tariffs is look, he's not afraid to do it. Like, he implemented them, I guess, for a day, and now he's given us a 30-day reprieve. But you're going to negotiate some sort of solution, whether it takes a month, maybe you have tariffs for a month or two, I don't know. But it's hard to see how it would be sustained. Having said that, one of the things that we've been tracking is just the experience of the late 70s and early 80s. Okay, so you had, in the late 70s and early 80s, you kind of had there's a guy called Torsten Slok at Apollo in the US, and he puts out a great, I have a very short attention span, and I love these emails because it's one picture and maybe a sentence. Usually it's just a picture, but sometimes like a sentence or two. And so the one that he sent, which really caught my eye, was, I think he called it a second mountain of inflation. So you got to give the guy credit, because he started calling this like a year and a bit ago. Okay. And he sent this chart, and he's showing inflation in the 70s and 80s, and then he's overlaid inflation today on that chart. Okay. And it's tracking like almost perfectly. Wow. Okay, so you had inflation, they raised interest rates, then inflation came down. Right. Okay, then they actually caused a recession because they raised interest rates. So then they dropped interest rates, and then inflation came back with a vengeance, and then you got Paul Volcker, and he came, and that was when, Eddie's old mentor in life insurance was selling annuities at like 16%, because like interest rates went to 16% and 20% in the US, okay? Could that happen today? I think you could have that double mountain of inflation. I don't think we could have 16% interest rates. Everybody would go broke, including countries. But the point is, could you have that inflationary experience again? And when you go into ChatGPT and you're like, okay, tell me in the late 70s, like, what was the mood? What was the tone? What was going on, right? And it's tariffs, okay, and it's trade wars, and it's instead of Canada and China and Mexico, it was Japan, because they were making cheap cars that were better than the American cars. Right. And so there's like stuff that rhymes with that.
Well, history repeats itself.
So my point is that people do stupid things, okay? Tariffs are not smart, but you get Trudeau, who thinks he's got to show how tough he is against Trump, and he goes and pokes Trump in the eye, and then Trump's like, well, screw you then, I'm putting on these tariffs. And like, Trump doesn't care, he'll just do it, right? Yeah. So there's a scenario where you could end up with tariffs, right? You still need to play your cards right and negotiate in a way that you get the desired outcome that you need, going up against somebody who negotiates the way Trump does, right? But hopefully there's a solution, whether it's 1 month out or 12 months out. It's not like we're sitting here with tariffs for multiple years.
No, and I think it's how long the theater or that act lasts. I agree with you. So I think the way I looked at it, again, was just trying to stay logical. So humans, as you say, are not logical. Trump thrives in chaos, and that's how he works, right? Like, if I'm just very unpredictable, you won't know how to act. So I have control. If I'm unpredictable, Trump will always have control, right? Okay, fine. So I read a stat that Doug Ford's people came to him and said, so I think unemployment rate in Ontario, there's like 600,000 people out of work right now. Okay, fine. If the tariffs were to go in full force, okay, and we went to net zero, and like, I laughed when they said they were pulling like the alcohol off the shelves. I'm like, really? That's hurting the government more than it's hurting them, okay? When you look at how much money they make. But so again, theater. But it said that if they went to net zero, it would double. So Ford's going into an election. He's grandstanding because he's getting a lot of positive reinforcement by being like tougher than Trudeau. So he's going to come out and say, oh, we're going to do this, we're going to do that. And then you look at also even Trump, he also went on a platform to say that he was going to bring the cost of living down. So one, it would have caused their like oil and gas, and I didn't know this, but Benjamin Tull in his call said that the refineries in the US are not built to deal with any other oil other than Canadian oil. So now, what are they going to do? They have to import it. They're going to it's going to cause everybody's now their energy bills, gas bills, everything is going to be more expensive, which is the opposite of what Trump has done. Everything.
It's inflationary.
Everything. It's inflationary.
By the way, in cars too. Car parts, like cars are vertically integrated between Mexico, Canada, and the US, right? The parts come from everywhere. They're assembled in different places. Yeah. So you now tell an American that their F-150, which is assembled in Canada.
Which is the number one car. I have a very good friend whose husband is in the auto parts, in the auto business. He owns 2 plants, one in Georgia and one in here, in Alabama, wherever, and one here. And he said, if it happens, they would have to actually shut lines down like that day. Like there's no like waiting or seeing how it, like he's like, it's not going to happen.
Yeah. So cooler heads probably will prevail. I think it's theater and negotiating, but you never know. You got to plan. You got to plan for all outcomes.
Yes, I agree. But at the end of the day, yeah, I think it's the people, like you said, in your business who are able to wait it out. And Toronto is still a great place to live. And our population will still grow, and immigrants are still going to want to come to Toronto. I mean, when you think about compared to US, they can live anywhere. There's major cities. We've got Toronto, Vancouver. If you don't speak French, you're not going to Montreal. Calgary's getting there, but it's not the same. So what do you see?
One other thing on, it's so fascinating to me because what Trump has done, and forget about what you think about of his politics or him as a person.
Yes, let's take what you think of him out of it, for
he's
sure.
He's reframing like all of these orthodoxies that have just been accepted, over whatever, the last 20 years.
Yeah, just sign the check over and over and over again.
And look at how it is changing the way people behave. So look at the liberals now, okay? Carney's like off the carbon tax, the capital gains, increase of the capital gains inclusion is off the table.
Being pushed by a year.
But it's just like they're backing off positions. And now you hear open talk about, okay, we need to build these pipelines. We got to sell our oil to other places. Like we got to diversify. Pierre's talking about like doing whatever we can to get all of our resources off the ground and not being obstructionist, which is what the government's been doing. And so it's forcing different conversations to the table, which are actually beneficial to Canada long term and increases the probability that those things will actually happen. So it's actually pretty good, I think, for Canada longer term.
I think it's better for the whole world. I really do. I mean, you've dealt with levels of government and you can see how completely inefficient they are and that they do things over and over again just because they've always been done that way. Yeah. And I hope for an election. So, like tomorrow, if you were to say for your world in build, we talked about the cycle for like condos. What would you say what are you projecting to say people start coming back and building again and having those conversations with you guys and getting out of the shade, let's say?
Listen, I can tell you my attitude. So the temperature, so you go back to that mean reversion slide, I'm ready to go bask in the sun. Okay, I'll put on some sunscreen, but I'm ready to go bask in the sun. So we're pretty optimistic. On the other hand, the builders aren't there yet. Okay, so the volume that we're seeing, like we're not seeing big volume in that stuff. I think as lenders, where the opportunity is going to be for us is people who have land who've been taking it through the process and need more time. They've got to refinance, whatever. If we can wrap our heads around it, I think more of the lending opportunity is going to come on the bigger development stuff. Okay. Or like the laneway. Like, we've got somebody in our office who's kind of specialized in what we're calling the missing middle, right? So it's laneway, or it's trying to build, 3 units or 4 units or 5, like just trying to take advantage of whatever friendly rules the city has made to try and encourage gentle density, Okay. So that maybe, we're not seeing significant yet, but maybe. The interest rate markets have been so volatile. But they are trending down. And so if they go low enough, then maybe, that'll spur some more activity. But I don't know. I'm optimistic about what I would call risk-adjusted returns. So in other words, seeing less downside to the value. Like we lend ultimately, housing is our collateral, right? Like the end product is our collateral. I see less downside in the price. Right. But we're selling to speculators. Like we're selling to a builder. A developer is a speculator, right? They're buying something and they're hoping to sell it once they've finished adding value to it, right? And so we need to, I don't know if the spec home builder is coming back, like the single, like the person who's driving around a pickup truck buying a bungalow and tearing that down. That's not happening right now.
Well, because just land is so expensive. There's no money in it. Yeah, no, I agree with you.
And I don't know. Like I don't know if land in that space is repricing as much as development land is repricing.
Yeah. No, my hope for 2025 is more of just like a level, less of a cautionary tale, more stability, and I think it's probably going to be rough for the next 6 months. I think it's going to be up and down, markets and interest rates. I don't think they're all going to go down. I think we might There's talk that, they might even just stay flat for March. It won't be another, interest rate drop. But I think we're going in the right direction.
Yeah, look, interest rates are interesting. We usually correlate with the U.S. quite strongly. But because if you look at the economic prospects for Canada versus the U.S., they don't look great right now, right? America's actually in pretty good shape. Yeah. Canada isn't, right? And so you could see a situation where if you go back and look at long rates, like you go back and study interest rates forever, they're closer to 5.
Yeah, no, for sure.
And so again, if that's the average, then at some point you should be there, right? Now, we haven't been there for a very, very, very long time, but it does beg the question, should we be there? So there are some economists who argue what they call higher for longer, right? So they're actually saying, like that guy Torsten Slok at Apollo, who's saying second mountain of inflation, what he's basically saying is costs are still going to go up. You're going to have higher interest rates, and everybody's going to be surprised when that happens because they all think that rates are coming down now. So again, we have no idea what's going to happen with rates. In Canada, it does seem to be that the momentum is down. And to your point, the economy, it doesn't feel great.
Well, we're in a recession. Let's all also remember, that was the other thing I wanted to point out about politically was we're in a recession. We're just not on paper recession. The only thing that's actually keeping us out of a paper recession is the fact that the government pumps so much money into the economy, and also because we have such high immigration, they're just spending money on basics that kept us afloat. So if those tariffs were to come in, we would be put into a recession, which is not going to look good on the Liberal government, right? So I think...
sorry, just
please.
One other thing on interest rates, which is a cool thing. So David Rosenberg, he pointed out that when you look at our inflation numbers, and then I actually found a cool chart from this guy named Ben Rabidou, who presented at our conference. If you strip out mortgage interest from inflation, inflation's actually way lower, right? I think it's somewhere around 1%. I can't remember the exact number.
Is it really that low
now? But
now?
it's much lower. And so that's interesting because the Bank of Canada directly impacts that, right? If they lower interest rates, anybody who's on a variable rate mortgage immediately, that portion of CPI immediately goes down. Right. And so I think that gives them a little more cover.
Right.
To the extent that there's weakness in the economy, it gives them more cover to drop rates some more. So I just met with some bankers yesterday, and they were saying that I guess the markets are kind of forecasting 25 basis point cuts at each meeting. I
think Benjamin Tal was calling it at 2% at the end of this year. That's where he saw it,
so that's lower.
Yeah. But I also a reminder that we're also the only country that includes mortgage debt in our inflationary numbers. So, I can see why the US and the feds in the US did things very, very differently. Yeah. You can also lock in, imagine, you have a 30-year mortgage you locked in during COVID with 1.5. You're going to have that interest rate for the life of your house of living there. Would you stop spending? I wouldn't stop spending. Yeah. Oh my God, I would be buying a new car. I'd be going on vacation. Can you imagine?
Look, there's downsides to that too, right? People are stuck in their homes. They can't move because they can't port their mortgages.
Yeah, fair.
And so it's when you
I was just stuck on the 1.5.
No, but it's interesting because you look at the structural differences between the two markets. Right. And they can repay those mortgages, whenever they want with no penalties.
Right.
But they can't port them. And so people aren't selling their houses. So there's not a lot of supply of houses available for sale in the States because if you locked in your mortgage at 2% or 2.5% for 30 years, and now I think if you replace it, it's probably 7%. So you can't move. Anyway.
Yeah, unless you're a Canadian who owns a condo in Florida, but that's for another conversation. I think we could talk all day. Thank you so much. That was amazing. That was great. I'm going to insist you come back after you do your next annual meeting. That was awesome. Thank you, Evan Cooperman.
Thanks for having me.